Yes, Morgan Stanley has come out with this research tactical idea where they have continued to maintain their overweight rating and target price of 10,000 rupees, and they're expecting the share price to move higher in the next 60 days. Now, they believe that the current price, which they are saying is at around 24 times their FY25 P, is a good entry point for any investor, given that Bajaj Finance is expected to grow its EPS at a CAGR of around 25%, and the ROE over medium term for Bajaj Finance is expected to be around 20%. Now, they're saying that there are a lot of narratives in the market that the competition will eat into the company's market share, but they are saying that even in past there have been such narratives, but despite that Bajaj Finance has displayed a strong growth and has managed to expand its return on asset over time. Now, they believe that there might be many challenges for the new incumbents in the market, and hence Bajaj Finance market share won't be impacted going forward. Now, apart from that, they're also expecting Bajaj Finance to go through a strong cycle profit, and they're also expecting profitability discipline from Bajaj Finance going forward. But Nikunj, do you see this as the money that has moved out from HDFC Bank to actually come back to Bajaj Finance, because that is still displaying a strong growth targets, right?
See, let's understand what do markets want. Markets are always hungry for one word, which is growth. For HDFC Bank, growth is slowing down. Why? Because the liability franchise is not getting created. For Bajaj Finance, there is no problem in terms of getting the liability franchise. Why? Because they are getting good deposits, and B, they can really tap a lot of capital. One. B, Bajaj Finance is not expensive. So, if you're buying growth, and if the reason for growth for Bajaj Finance is that they're able to generate low-cost deposits, so the growth is strong. And the raw material, which is low-cost deposit, that is intact, and valuations are not that attractive, and you still don't want to sell out of India and you want to be in a large cap stock which is pedigree nature. What will you do? Well, you will switch out of HDFC Bank and you will move to Bajaj Finance. I think that is the idea what Morgan Stanley seems to be indicating, that in the next 60 days is very specific. We estimate there is a 70 to 80%, which is very likely probability of this scenario, which means they are telling you simple that they expect that money will come out of HDFC Bank and it will move to Bajaj Finance. Why? For the reasons I've outlined. Growth in Bajaj Finance is superior. The reason for growth is that they're getting deposits, which HDFC Bank is not able to get. And C, the valuations for Bajaj Finance is not historically very, very high, that you're saying, okay, for a 25-30% growth, I'm giving a price to book of some 10-12 times. So on that scenario, I think it's coming down. See, let's understand what's happening in HDFC Bank. They're not getting deposits. That's it. अगर deposits नहीं आएगा तो फिर lend क्या करोगे? And it is a surprising factor that for the biggest brand after SBI, why are they not getting deposits? Why are deposits not coming to HDFC Bank? Is it size? Is it customer service? Is it something else? I don't know. So markets are saying that if you don't have deposits, you will have to slow down. So the 15-16% growth will happen to 12-13%. And that is where the adjustment is happening. Very simple. बहुत complicated नहीं है.